So this is kind of odd. I do Zoom meetings all the time, but I'm always seeing my audience, and this is a Zoom webinar, so I don't see whoever is on the call with us. So that's a little unusual for me. I like to have an audience, I guess. So there's looks like there's about 40 attendees. So thanks everybody for joining. Most of you know who I am. I'm David Elmore, the senior tax strategist and financial planner. I'm senior because of the gray hair, and they put me up to this. But we wanted to try to get out in front of you guys about the CARES Act. I'm going to share some slides here in a second. We've had tons and tons of questions, and we still have questions. So we're not experts on this at all, and there may be people on the call that know more than we do, and I'm sorry if you do, but there's, I think, a lot of people that that don't know anything about the CARES Act and how it may impact their business. So that's why we really wanted to get in front of you and share what information that we know as of this point or as of last night. And I stress that because it's extremely fluid. Even as of last night, the SBA changed the criteria to the banks, which was a pretty radical change. And so every day it's like we're having to learn this thing all over again. Monday of this week, which seems like an eternity ago, I devoured a bunch of information, thought I had a pretty good handle on it, and then everything changed by that afternoon, and it's changed daily. The president and Treasury Secretary Mnuchin put out these broad wish lists. Congress then passed legislation, the CARES Act, and even though it was nearly 1,000 pages, there's very little details, and they left it to the SBA to try to figure, and the Internal Revenue Service to try to figure out how to make it happen. And so those bureaucracies are scrambling to try to make rules, and if anybody's ever dealt with the SBA or the Internal Revenue Service, they know that that's a slow process. I think that's all. I'll go into my slides.
David, I'm going to say one thing. We're going to be monitoring the chat, so if you do have any questions, use the chat feature, not the question and answer feature, and we'll do our best to respond or get David to respond to popular questions.
Thanks, Wes. Okay. Wes, can you see that?
Yes, I can.
All right, so there's three broad topics that we're going to talk about. The economic impact payment, that's affectionately known as the stimulus check. The economic injury disaster loan and grant, that's the EID. Oh, gee. Yes, I know this stuff. The EIDL, and then the PPP, or the Payroll Protection Program. So the majority of you care more about 2 and 3, but I did want to talk briefly about the economic impact payment, or the stimulus check, and that's been grabbing all of the headlines. So most everybody knows it's $1,200 per person. If it's a jointly filed tax return, it's $2,400. Head of household is $1,200, and there's $500 per child under age of 17. There is a phase out, income phase out, so up to $198,000 of adjusted gross income for a married couple, you will not receive any of the stimulus check. How it's going to be delivered is still kind of up in the air. There was some direction from the Internal Revenue Service yesterday about this that did clarify some things, but wherever they can, they want to do direct deposit. So the Internal Revenue Service is going to use your most recently filed tax return, whether it was 18 or 19, and they're going to determine whether you're eligible or not based on your adjusted gross income off of those tax returns. So if you and here's a tax planning or strategy point. If you haven't yet filed your 2019 tax return and your income is below, your 2018 income was below those thresholds, then don't file your 2019 tax return until the stimulus comes out. On the other hand, if your income dropped in 2019, you want to try to get that filed as soon as possible so that the IRS is looking at your 19 AGI as opposed to your 18. They are also going to be using the direct deposit information off of your 18 or 19 tax return to direct deposit. So that, to me, that bothers me a lot because people change bank accounts all the time. And so if your most recent tax return was 2018 and you've changed banks, then that's going to get rejected by the bank. The IRS said yesterday they plan to start pushing these out the week of April the 13th. If you don't have bank information on there, for instance, if you owed in 2018 or 2019, we don't put the bank direct deposit information on the tax return so that IRS doesn't have it. So they're going to mail checks, and any mail checks are going to start going out sometime in May. They haven't said when. So this next item is new under the Internal Revenue Service 2020-61. It came out yesterday, and this is what I expected them to do in the first place, and they said they weren't going to, but now they are recognizing Social Security relationships. So there's a lot of people that don't need to file a tax return, particularly those that are receiving Social Security, whether it's Social Security disability or Social Security retirement pay, pension, and so they're not in the IRS system, so they wouldn't be eligible for a stimulus check. So now the IRS is going to take a feed from Social Security Administration and push the stimulus payments out to people based on the Social Security records, including direct deposit. So that still leaves some population out there that doesn't file tax returns for whatever reason, and the IRS is urging you to do so immediately. There was talk that they were going to put up a kind of a mini tax return that'll just capture information necessary, such as name, Social Security, address, and direct deposit information. But we have not seen any clarification on that. So as it stands now, people that are ordinarily not required to file tax returns should file tax return in order to be eligible for the stimulus. This is a continually fluid situation, so we really don't know much more than this. My guess is that this is similar to the stimulus payment that President Bush pushed out when he was in office, and that was pretty successful, but there was a reconciliation on the subsequent year tax return. In other words, I'm guessing that on 2020, there's going to be a reconciliation so that if you didn't get it, you'll get it on your 2020 tax return. So I remember doing tax returns back in those days, and we'd ask people, did you get the $500 stimulus check? And they said, no, we didn't get it. And then there was a site the IRS posted, they gave us access to their database to where we could go and check and see if they did get the stimulus payment. And most of the time they did. And so I'm guessing that same type or a similar type situation is going to occur with this one. But again, there's no direction from the Internal Revenue Service beyond what we're showing here. All right, I'm going to move on to the two loans then, unless Christy and Wes tells me there's a bunch of questions on the stimulus check.
No, I think you can move on. I don't see any.
Not to me.
Okay, so the EIDL and the PPP, which we'll call it, are the two loan programs that are available under the CARES Act. and again, this is very fluid, but this is what we know today. So I have a bunch of slides, but they'll go quick. So they're very different, and as I go through these slides, you'll start to see the differences in the two. But just on a higher level, I'll say that the PPP is, as the name says, is the payroll protection program. The EIDL is more for a business ongoing stimulus or propping up. And so the EIDL is a bigger program, and not necessarily from the standpoint of how much money you could borrow, but what the funds are designed for. The PPP is really designed for payroll. And the idea or the intent of the law here is for employers to keep their employees employed and paid, as opposed to having them out on the street unemployed and or collecting unemployment benefits. And so that's the purpose of the PPP program. The EIDL is more just to keep businesses open. And so you can restructure other loans inside of the EIDL. It's the payment terms, and I'll discuss that later, are longer. So it really is designed to be long-term relief, as opposed to the PPP is very short. It's for 2 months of payroll, as we'll see. I'm kind of getting ahead of myself, but in both cases, where does the money come from? So in the EIDL, it's coming directly from the SBA. And so the way you apply for that is you go onto the SBA site, and there's a place to apply for the EIDL loan. It's a very short application. It's similar to the PPP application as far as what is asked, and that's also where you apply for the $10,000 grant, which I'll talk about in a little bit. As opposed to the PPP is an application that you fill out with your local lender, SBA lender, federally insured depository institution. And that's all of the big banks, the regional banks and smaller banks, some credit unions, particularly federally chartered credit unions. And I'll say that locally, DuPont Community Credit Union is not participating in this, not because they don't want to, but because they didn't apply until 2 days ago. And I imagine that's a slow process as well. I've tried talking to as many banks as I can, and pretty much nobody is ready for this. JP Morgan, Wells Fargo, B of A, the big banks, they've all said they're not ready. If you go on their website, they say they're not ready. And even though this opens today, they are not accepting applications. Some of the smaller local banks and regional banks say they are ready, but but their lobbies are closed because they're not accepting retail customers into the branch, and so we're going to have to fax or upload or email all of the necessary data to them. So this is very unknown. A lot of the banks are going to use their own criteria on what they're going to ask for. Wes, can you see that?
Yes, and
Okay.
I'll just chime in. I just got a text actually from somebody at DuPont Community Credit Union, and they are eligible now for the PPP.
Oh, wow. That happened quick.
Yep.
Good job. All right, so this is the Paycheck Protection. This is a PPP application form. And you can also get that on the SBA website. It's a fillable PDF, and it's pretty short. It doesn't ask for a lot of information. There's a lot of attestations here that you do, and and that's it. And then there's 2 pages of instructions there. So it's 2 pages of fillable stuff and 2 pages of instructions and disclaimers. So then just talk to your local bank about how to submit that, who is accepting it, and things like that. There's also some instructions that you'll find there, but I didn't see that there was a lot of information in those instructions. So what's going to happen here is on the PPP application, you fill that out and you talk to your banker about accepting it, and then you submit it to them, and then they're going to determine whether you're eligible or not and how much you're eligible. So they are the gatekeepers here. SBA is backing these loans, but just like almost any SBA loan, it is through a local lender. When can you apply? Today. So today is the first day that the SBA opened up the PPP applications. The EIDL was sometime at the end of last week. I know a number of our clients already applied through that, mainly to get the grant. Now, so today's opening is for small businesses, sole proprietorships. And I believe what they mean by sole proprietorships are sole proprietorships with salary or wages. I don't think it's sole proprietorships without employees, because the next date is April the 10th, which is next Friday, I believe. Yep. And that's when independent contractors and self-employed individuals can apply. It's really hard for me to get my mind wrapped around how independent contractors and self-employed individuals will qualify for a PPP loan other than just for themselves. And as far as the determining the wages of a sole proprietor, it's going to be the net income of the Schedule C last filed. And so many sole proprietors try to drive that number down to avoid paying or minimize paying income tax, and so that's going to hurt them for eligibility and the amount of PPP loan that they are eligible for. So who can apply on the EIDL? It's businesses with 500 employees or less, sole proprietorships, independent contractors. The latter is available now. Over on the PPP, businesses and entities that were in operation as of February 15th, and I assume that applies to everybody on this call. It does include nonprofits and tribal businesses. Affiliation rules, this comes to the point of controlling organizations. If the business is controlled by a larger organization, they may or may not qualify. And then also, if you have multiple businesses, they're going to aggregate all of those businesses to one to determining eligibility. Again, I don't think that affects very many people. The maximum amount of loan is $2 million on the IDL. Applicants can apply for up to the $10,000 grant. So this grant thing has, it immediately got a lot of attention, and I really don't know how it's going to work. As far as I'm concerned, it's not working. I have clients that applied for the EIDL over a week ago or about a week ago, and as you see here, the advance $10,000 grant will be distributed within 3 days of the application. Nobody, to my knowledge, has received any of the grant. That there may be some out there, but nobody's told me they've received any money. The grant is just that. You get, and the up to, I haven't seen any definition of the criteria that determines how much you get. The original language out there was just straight up a $10,000 grant. and then there started to be language out there saying, well, it's up to. And so I'm assuming that's based on payroll because that's the information that's asked for on the SBA site for the application. Again, on the application, you put in your bank information, so they're supposed to direct deposit that directly into there. By the way, please be very careful about where you start entering your data for the application of the EIDL. There are a number of fraudulent sites out there, and there's a number of stories where people have found what they thought was a legitimate SBA EIDL application site, and it was a fraud. And so whatever the fraud site was captured all of that information, including the federal tax ID number, the Social Security number of the owner, the bank account of the business, etc. So just be very, very careful that you're where you think you should be. If you back to
David, there's a couple questions that we might want to address here. One was, are there limited funds available, or is it as many people that can apply will get this money? And is it a good idea to apply for both of these loans?
Okay. So if you do go to the SBA site and you find this PPP information sheet, and I know I'm not talking about the PPP right now, but down in the middle here is access to the SBA.gov site. So that's a legitimate link, and so you can link onto that. Yes, there are definite hard limitations on particularly the PPP loan. Somebody might be able to help me, but I believe the limitation or the allocation of funds from Congress is $350 billion to the PPP. So once that runs out, that's out, and it is a first come first serve. So you should try to get, if you want to do a PPP loan, you should try to get it in as soon as possible. Again, in my conversations with banks, they're prioritizing their existing customers. And if you have a relationship with a banker, it's good to talk to him or her directly so that they pay attention to yours. Again, the bankers are going to take your PPP application and they're going to key it into the SBA site. They'll get a SBA loan number, and then they'll process it. And once they process it, they will release the funds to you into your bank account. Can you apply for both? Generally speaking, I believe the PPP is a better loan, mainly just because it's forgivable than the EIDL. But if you did apply for the EIDL, particularly just to get the grant, you can roll that grant. Say you got $10,000 under the EIDL, you can roll that grant over into the PPP. Also, on back to that grant, if you stop the loan process, it's my understanding that you keep whatever grant was issued to you, or if you get rejected on an EIDL, you keep the grant that was issued to you. The PPP loan maximum amount is $10 million, and it's calculated based on payroll. And essentially, you just take your 2019, assuming you were in business all of last year, you take your 2019 payroll, and that's how you calculate it. It's based on 2 months of wages. So if your total payroll, including owners, was $100,000 last year, say $120,000 last year, divided by 12 is $10,000 a month, times 2 is $20,000. So the loan, the PPP, is based on $20,000 of payroll cost plus 25% overhead. So the way the application is calculating that is maybe a little in the weeds here, but if you look here in this section, so your average monthly payroll was $10,000, and then you multiply that by 2.5. So in my example, if my monthly payroll is $10,000 times 2.5, it's $25,000 is your loan amount. And then it's the number of employees that you had last year. So that's the determination of how much the loan could be for. So to Wes's question there, if you took out an EIDL loan between February 15th and June 30, you may want to refinance that into a PPP loan so that you can possibly get it forgiven, which we'll talk about. So what is included in payroll cost? It's obviously salary, wages, commissions, any other compensation, including PTO. It does also include group health care costs, not what the employees pay, but what the employer pays. It also includes contributions from the employer to retirement accounts. And it includes payroll taxes. What is not included is wages paid to any individual over 100,000. So back to my scenario there, if you're just looking at last year's wages, anybody that made more than $100,000, whether they're an owner or not, you use an annualized $100,000 number there, which is what, $8,000 a month or something, 8,300. Yeah, 833333 is the cap. So if somebody's making $150,000 or $120,000, which would be $10,000 a month, you can only use 8,333. It's capped for any individuals paid more than $100,000 annualized. The taxes imposed or withheld under chapters 21, 22, and 24 of the Internal Revenue Code. There's been a lot of discussion about this particular phrase, and some people are interpreting it differently than me, so they're wrong. That was a joke. I believe them to be wrong. So the Internal Revenue Code chapters 21, 22, and 24 are dealing with payroll withholdings, and they're saying that you don't include or you actually exclude payments that you made. In other words, for all us employers, it's essentially it's 941 tax, 941 and state tax. And so they're saying if you had wages of $10,000 and your 941 deposit was $3,000, then you subtract the 3 from the 10, and so your adjusted payroll expense is 7, and that's just ludicrous. Nobody thinks like that in business. I believe the interpretation of this is that you simply can't add the 941 cost or payment to the 10,000 to get 13,000. It's not 13, it's 10. So it's $10,000 plus the employer part of the Social Security, the FICA tax, and also any unemployment federal or state tax that the employer has to pay. Compensation of employees outside of the U.S. Don't count and probably don't matter to any of us. Also, qualified sick and FMLA that was paid under Section 7001 and 7003. Which applied to employers with 50 or more employees. So if it is a loan, at the end of the day, both of these programs are loans. The IDL is more of a loan, and the interest rate is 3.75, and on the PPP, it's 0.5%. And these have changed several times, including about 2 days ago. But this is the current terms. The EIDL is up to 30 years and the PPP is up to 2 years. And again, the PPP, and we'll talk about it in a bit, is hopefully forgivable, or a large portion of it will be forgivable, but the EIDL is not forgivable. And so this is back to my original description of these two different programs, is the EIDL is really more for permanent financing. It's to help the business long term. What I'm hearing people wanting to do is to try to roll up existing debt, including mortgage debt, into the EIDL. So, for instance, if you have some longer-term debt that you're paying more than 3.75 on, you may consider financing that into an EIDL loan, and it's up to 30 years. And these criteria, the up to, those are going to be determined by the lender. Again, on the PPP, if you don't get a portion of that forgiven, then you're obligated to pay that back over a 2-year period of time. But the first loan payment is due on the EIDL 1 year after origination. The PPP is deferred for at least 6 months after the loan origination, but interest does accrue on both of those during the deferment period. What can you do with the loan proceeds? And this is where SBA gets pretty sensitive, and there's a lot of disclosures in these applications that you attest that you're going to use the proceeds for what you say you're going to use them for, and it's to pay payroll or to have financial obligations of operating costs that could not be met under the had we not had the disaster. On the PPP, it's wages, the same things that we talked about as to what qualifies for the loan, but you have to use the loan for paying wages, health insurance, payments of interest on mortgage, the interest only on mortgages, rent, utilities. So the forgiveness, which is the most interesting part, and I have several slides on that. So the EIDL, as I've said, is not forgivable. There's no component of that. It's just a straight up loan other than the grant. So if you get the grant up to $10,000, that is forgiven by definition because it's a grant. Under the PPP, it can be forgiven if the proceeds are used for payroll expenses over an 8-week period of time, 8 weeks starting at the origination of the loan. Failure to maintain the average number of full-time employees during that time will cause you to have to pay it back. You'll lose your forgiveness. So if you had 10 employees and you let 5 of them go and you didn't bring them back, that's going to jeopardize your loan forgiveness. The amount forgiven is also reduced to the extent the compensation to any individuals paid more than $100,000 a year, annualized that is. So obviously it's over an 8-week period, so you have to annualize that $100,000. Forgiven amount will not constitute cancellation of indebtedness income for income tax purposes. So again, the bankers are the gatekeepers, and they are going to be the people that determine the forgiveness of the loan. They're going to ask for documentation verifying that you, in fact, maintained the employment level that you had going into this, and that you paid those people at least as much as what you had paid them before, including all the payroll taxes. You're going to have to supply them with documentation to that effect. Also document the overhead things such as mortgage interest, rent, utilities. So, you know, it seems kind of weird, and it is, that we're going to have to report to our banker regarding these things, but you have to keep in mind that they're kind of a liaison to the government, in particular the SBA. So they're going to have to forward this information. The bank's working with XYZ company, and they lent them $10,000, and we forgave the loan because we felt like they met the criteria for loan forgiveness. And the SBA is going to say, well, show me why. And so they're accountable then to the SBA to kind of prove the decision that they made. So they're not necessarily the bad guy. And so at the beginning, the banks are going to ask for certain information that you may or may not think is applicable based on the Paycheck Protection Program application. But the banks are the ones shelling out their own money here, and then they're going to have to get repaid either from you or from the SBA under these programs. So they have risk, and so kind of cut them some slack here. I've had some clients that have been angry with the bank for what they're asking for, but they're kind of on the hook here. They're a gatekeeper, but they're also liable if things don't work out. Collateral, the SBA will put a UCC lien against business assets on an EIDL. There are no collateral requirements from the business or the business owners on a PPP. There also is no personal guarantee on the PPP, but on an EIDL there is. Will you have had to file your 2019 tax return in order to apply? Basically, no. But on the EIDL, because it is a bigger loan, the bankers are going to require you to submit a 4506T, which is a power of attorney, or the ability for the bank to request a copy of your tax return to verify the information that you're providing them. There is probably not such a requirement on a PPP, but again, that's going to depend on the lender itself. I'm about done. Disclosures, as I said in the beginning, I don't pretend to be an expert on this. I'm trying, we are trying to figure this thing out the best that we can. It's ever changing. Many of you may already have known all of this or more, and if so, I apologize for wasting your time. But hopefully these things were helpful to you. I also want to point out one thing. There's another even more confusing program out there, and it's the Employee Retention Credit. And it's designed to encourage businesses to keep employees on payroll. It's a refundable tax credit up to 50% of up to $10,000 in wages paid to eligible employers whose business have been financially impacted by COVID-19. We've pretty much, there's a couple of payroll employer credits out there. That's the bigger one. There's also the deferral. If you do either of those, it's our understanding that you forfeit eligibility for the PPP, and so that's why we have not encouraged people to do it. If the PPP program runs out of money, the $350 billion, and Congress doesn't come up with another package to fund that further, which we believe that they will, then we may look a little closer at these employer credit programs that are out there. The first one was the deferral of paying the tax, and it's only, the best that we can understand, it's only deferring the employer portion of the Social Security. So it's the 6.2% match. You can defer that up till I think it's the end of the year. But to me, cash flow is everything in a small business. And if you just mount up that debt come Christmas time, you're not going to want to pay that. So I don't see where that's a whole lot of benefit. This employer retention credit, however, does have some appeal. Again, you get paid back or you receive your credit on that through 941 tax, or you could submit a Form 7200 to get a payment sooner. But until we exhaust this PPP, I believe that the employee retention credit or the tax deferral credit are not as good. So we've not focused much on either of those, and so consequently we're fairly ignorant to both of those. All right, I am done. Wes, Christy, you guys have anything?
There are a bunch of questions rolling in. We'll answer some of them here, and then we'll do our best to answer the rest of them privately after this webinar. A lot of people are concerned about independent contractors. What if my business is predominantly independent contractors? Does that count in payroll costs? How do we treat that?
That's a good question. On the independent contractors, I have read, not specific instructions on the PPP application, but I have read that independent contractors do count towards payroll costs. So I believe the answer is yes.
And then one of the attendees just informed us that they have made more last-minute changes, and now the PPP percentage is up to 1% from
really?
0.5%. And there's a few other changes as well. So like we said, it's ever changing.
Right. Oh, you mean the interest rate charge?
The interest rate.
Okay. Okay.
Yep. Should I apply for the EIDL or either of these if I don't really need it?
Well, I think everybody's affected by the coronavirus in some fashion, and you know, that's a tough question, and I think it really gets down to a core fundamental question as to I don't know. I kind of liken it to people. People have told me before that you know, I don't want to claim my church contributions because I don't want my feelings of contributing to God to be tainted or to be tainted by the taxes. I don't want the tax benefit to sway whether I give to God or not, and that's fine, and that's up to them. And I don't slight people, and that's not my purpose here. But my rationale there is render to Caesar. Oh, what? Oh my gosh. Render under Caesar. What is this? Anyway, so if Caesar says this is what you owe me, then that's what you owe me. If Caesar is saying, i.e. the government is saying that because you're a small business, we value what you do for the overall economic environment, employing people is our first and primary thing, and so we want to help you do that. And so they're trying to push money into the economic system, and so consequently, I don't have a problem with it, but I defer back to each of our consciences to determine whether you want to do that or not. How was that? Was that politically correct?
And any advice for mainly for self-employed people or people with rental property income?
Yeah, the rental thing has come up in the last couple of days. That's going to be next Friday. That's going to be under the 10th. I think they qualify, and the reason I do is because of the Unified Business Income deduction, the qualified business income, QBI, that we all dealt with starting on the 2018 tax return, which says that small businesses get to deduct 20% of their profits as a deduction. And there was much discussion about whether rental operations qualify for that. And the longer answer is, if it's active rental, not passive rental, then it does qualify as QBI. Well, to me, if it qualifies for QBI, then it would qualify for these loans because it's a business. I think if it's passive, if you deem it to be passive, I don't think it would. That's just my first interpretation of it. I don't think these questions have kind of hit until the last couple of days, so I'll be monitoring the tax practitioner community to see what other people believe. But I think if it qualifies for QBI, it would.
All right, I'll probably do one more question. Basically, I let all my employees go or reduced all their hours, and now I want to take advantage of this and rehire, but they don't want to come back.
Well, and I'm glad you said that. So I meant to talk about that. So if you've had to shut your business down because you're a dental practice or a hair salon or a restaurant, does it make sense to what is the best thing to do? And I have a hard time thinking that what we originally advised people to do, and that's just go ahead and close, go ahead and lay your people off, have them go collect unemployment and run through that system. I still believe that's probably the best answer, because nobody knows that this thing is going to be done in 8 weeks. I'm sure hoping that it is, but then you're on the hook for managing those assets. In other words, if you get a $50,000 PPP loan to hire back your people, now you have to pay your employees and the benefits and all of that, and in hopes of getting that loan forgiven based on your banker and the SBA. So I still believe that that's probably the best situation, but everybody's going to have to determine that themselves. But you can hire them back. Certainly that's what PPP, it's one of the angles of it. They want you to apply for PPP, get the money, hire them back, pay them, and then we'll forgive the loan. So that's certainly one approach that can be taken, but it seems to me you're taking on a great deal of risk for all of those things to work out.
I think that about wraps it up. Again, we will respond to these questions individually, and if you do have additional questions, please reach out to us and we'll do our best to answer.
Real quick, David, do you want to just talk a little bit about tracking what you're spending the money on for the PPP, so it's easy when you go in back to the bank for the forgiveness?
Yeah, some people, I think even Christy had recommended to really isolate these loan proceeds and pay them out to maybe even to the extent of having a separate bank account to clearly show where you spent these funds to be qualified for loan forgiveness. The criteria, the level, the bar is going to be pretty high on proving that you spent those monies on qualified expenses. And again, those are payroll taxes, health insurance, but does include rent and utilities and overhead. And I don't know that I said this, so I'll say it again in case I didn't, but you cannot, the payroll part of that has to be at least 75% of the loan proceeds. If you and only 25% of that can be for overhead. If you don't spend the PPP loan proceeds on at least 75% for payroll expenses, you absolutely forfeit any loan forgiveness. All right. I hear crickets, so we'll wrap it up. Thanks everyone for jumping on. If you have, we're again not experts, but we'll help in any way that we can. So just reach out to us if you have questions. These are very strange times. None of us have ever been here before, and hopefully together, by the grace of God, we'll get through it. Thanks everybody for jumping on the call.